The Precious Metals Week in Review, September 11th, 2015. Brought to you by Precious Metals International. Volatility continued in what was a shortened trading week due to the Labor Day holiday in the U.S. Growth fears in China and the growing refugee crisis in Europe continue to be the main sources of volatility and uncertainty in the markets. The number of Americans filing new applications for state unemployment fell by 6,000 claims to a seasonally adjusted level of 275,000 for the week ending September 5th. The 4-week moving average of claims, which most economists consider to be a better measure of the state of the U.S. labor market, ticked up only marginally higher, rising by 500 claims to a new level of 275,750 last week. All eyes will be on the U.S. Federal Reserve as it meets once again next week to determine the course of monetary policy. Analysts still question, given the current state of the global economy, whether the Federal Reserve will be able to initiate what will be their first interest rate hike in the U.S. in more than 9 years, if it happens in September. In another report, the U.S. Labor Department noted that import prices fell 1.8% in August, largely on the back of lower petroleum costs and a stronger dollar. It was the largest drop in import prices in 7 months and may indicate that a stronger dollar and weakening global demand will continue putting downward pressure on inflation, where imports are concerned. In the 12 months prior to the August reading, import prices have declined 11.4%. Continued low inflation is one of the things which could put pressure on the Federal Reserve to hold off on its decision to begin raising rates this month. Consumer sentiment in the U.S. plunged in September, according to the initial read of the monthly University of Michigan study on consumer expectations. The initial number came in at 85.7 for September, down significantly from an August final reading of 91.9. Richard Curtin, director of the study, said, "Consumers still anticipate a weaker domestic economy due to the global slowdown and are less optimistic about future growth in jobs and wages than they were a few months ago." The recent and massive volatility in U.S. stocks, driven by global uncertainty, seems to be the dominant factor for U.S. consumer concerns over the economy. Severe rains in northern Japan triggered landslides and floods this week as rivers burst their banks under the rush of incoming water. By noon on Thursday, some areas of Japan had received more than double the amount of what would be the usual rainfall for the entire month of September within just 48 hours. The ensuing flooding was some of the worst seen in Japan for more than 60 years. 100,000 Japanese had been evacuated from their homes by Thursday, and another 800,000 across the eastern portion of Japan had been advised to evacuate as officials predicted continued heavy rainfall for Friday. China continues to rattle stock markets across Asia and globally, as officials appear to be hunting for scapegoats in the recent and dramatic plunge that occurred in Chinese stocks. Police have been visiting investment firms and downloading their transaction records. Senior executives at China's largest investment bank were arrested on suspicion of illegal trading. One business journalist was arrested and subsequently broadcast on state-owned television, apologizing for writing an article that could have hurt the market. And a prominent hedge fund executive disappeared last week, only to resurface on Sunday, denying rumors which had started to spread that she had been detained by authorities, saying instead that she had been in an industry meeting and meditating at a Taoist retreat. The police responses, along with the dramatic monetary response to the plunge in stocks by authorities, which have spent the equivalent of nearly $235 billion propping up the falling stock market, have all acted to increase fear among potential investors in the Chinese market. According to the New York Times, Chinese police officers have downloaded extensive trading data and demanded answers from fund managers on why they sold shares when the market was going down, prompting discussions about basic investment strategy in China. Officers have bluntly told some fund managers to just stop selling stocks. European leaders are meeting again over the weekend, and the increasing migrant crisis is likely to be the main, if not the sole, subject of discussions. In a speech to the European Parliament in Strasbourg Wednesday, European Commission President Jean-Claude Juncker said that Europe was not in a good place and continued discussing the ongoing immigration crisis, saying, "We can build walls, we can build fences, but if it were you with your child in your arms, with the world you knew torn apart around you, there is no price you wouldn't pay, no wall you wouldn't climb, and no border you wouldn't cross to find refuge. We have to accept these people on European territory." On Monday, a Greek official told Reuters that the U.S. has asked Greece to deny Russia the use of its airspace for supply flights to Syria, after Washington told Moscow that it was deeply concerned by reports of a Russian military buildup in Syria. The Greek Foreign Ministry apparently confirmed the news, saying that the request was being examined, and a Russian news agency reported that Greece had refused the request. On Saturday, U.S. Secretary of State John Kerry told his Russian equivalent Sergei Lavrov that if reports of the buildup were accurate, that could further escalate the war and risk confrontation with the U.S.-led alliance that is bombing Islamic State in Syria. Reuters cited a senior U.S. official as saying that U.S. authorities have detected worrisome preparatory steps, including transport of prefabricated housing units for hundreds of people to a Syrian airfield that could signal that Russia is preparing to deploy heavy military assets there. Russia supports beleaguered Syrian President Bashar al-Assad, which the Western countries wish to see ousted, given his alleged use of chemical weapons against his own people. Crude oil continued to hover in the mid-$40 a barrel range as oversupply fears remained amid the ongoing refusal of oil-producing countries to scale back their production in a market that is literally flooded with oil. The euro had an extremely volatile week against the US dollar, surging higher when markets opened on Tuesday and then moving lower in fits and starts through mid-Wednesday when it found the floor. The euro began moving higher from there and appears set to close the week higher against the US dollar. The Japanese yen almost immediately began moving lower against the US dollar at the start of trading on Tuesday and did not find its floor until Thursday. The yen saw a slight increase against the dollar through Friday, but will close the week lower against the US dollar. Volatility should be expected to continue. The migrant crisis in Europe now appears to be taking center stage in the news away from China's ongoing economic struggles. European leaders will be meeting over the weekend and are highly likely to make the issue the sole focus of their discussions. EU leaders appear to be divided on how to handle the ongoing and massive daily influx of refugees that are fleeing escalating civil wars and the growing threat posed by the Islamic State in Syria and elsewhere across the Middle East. The Financial Times reported on Monday that European Commission officials were debating a proposal that would allow some countries to pay money in order to opt out of a proposed mandatory quota system for accepting up to 160,000 refugees. The surge in refugees, particularly in the southern areas of Europe such as Macedonia and Greece, have left authorities struggling to manage the situation. Tina Fordham, the chief global political analyst at Citi, told CNBC on Monday that this is a very tricky issue for political leaders, and we see how many European leaders have been caught wrong-footed because they're very aware of the fact that populations in Europe are concerned about immigration, and anti-immigration sentiment is high. Ms. Fordham, citing a recent surge in empathy for the plight of the children of many of these refugees, said, "At what point does the need to respond to the human crisis turn into something much more about the concerns about unemployment and all of the other long-standing issues that European people have?" In Asia, quietly reported on by Bloomberg and seemingly ignored by other financial news networks, the Shanghai Gold Exchange, which is the world's largest marketplace for physical bullion, is planning to allow trading collateral to include precious metals, foreign exchange, and securities from local currency. Citing statements from the SGE's website, Bloomberg reported that the move is designed to boost market services. In a statement dated August 25th, the SGE said, starting September 29th, trading members will be allowed to use certified gold bars as margin to open contracts. In a separate statement, the SGE made clarifications to its decision by saying the eligible assets will extend to silver, foreign currency, yuan-denominated stocks, and bonds and other securities. In an article that was ostensibly about the potential worker strike to demand higher pay at mines in South Africa, Bloomberg finally picked up on what we have been saying for months. Many mining companies are losing money on the ounces of product that they mine at today's precious metals prices. The article, titled South African Gold on the Brink with Half of Mines Losing Money, notes that the four largest metals producers in the country are losing money on about 35% of their production at current prices. At the same time, higher costs are cutting into profits as electricity bills climb to a record. Workers are also pushing for wage increases, with some threatening to strike if the salaries aren't doubled. In the article, Harmony Gold CEO Graham Briggs notes, the unions want to get the best deal they can for the workers, but when you've only got so much to give, then it's up to the union leaders to understand, where is that point? Where is that limit? The article goes on to note that 7 of Harmony Gold's 12 mines are losing money at current prices, and that it will likely close 3 of its largest mines if cost cuts don't make them profitable by the end of this year. The article goes on to note that at one newer project, Goldfields South Deep Mine, production costs are as high as $1,900 per ounce of gold mined. These real-world examples fly in the face of constant media pundits which keep calling for the price of precious metals to fall further. If miners cannot make money digging ore out of the ground at current prices, then they will likely have no choice but to simply stop digging ore out of the ground until prices rebound from current levels. As always, keep an eye on global news outlets over the weekend looking for any news which might influence the price of precious metals. Wise investors continue to take advantage of buying opportunities in precious metals to add more physical product to their portfolios to aid in diversification away from stock-heavy exposure. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, September 11th, 2015. Brought to you by Precious Metals International.